Welcome back to Golden Rule Radio, your weekly recap of the precious metals and the markets closely associated with the precious metals. Tori, Rob, and Miles. We're going to throw Miles under the bus right off the bat. Give us that brief of a weekly recap.
Yeah, guys, it's been a week, hasn't it?
Yeah.
Across the board, there's certainly plenty of political discussion out there after a pretty traumatic weekend. We're not a political show, and I don't necessarily know if the world needs a couple more guys talking about their opinions. But I will say, obviously, our hearts and prayers are out with everybody who was at the rally, including the families of the people that were lost this past weekend. So we will take a look at the markets and how it has reacted to recent news, as well as just some movements across the board in general. Let's start out with gold. This week, we're looking at gold pushing into new all-time highs as of today, peaking with a high at around 24.87, up over 4.5% from our recording last Wednesday. So a pretty significant move this week in gold. Silver, on the other hand, down about 1%, down to about $30.30, which has pushed that ratio that we're just waiting for it to keep going. Every time we start nearing that 70 mark,
it goes the other way.
It goes right back up to 78 or 80 again.
Little head fake.
We're at 81
Little
to
head
1 right
fake.
now.
Yeah, 81 now.
Yeah.
So certainly it's always fun to watch the ball bounce down the hill. I wish the hill was a little steeper personally, but we'll take what we can get. Platinum screaming up I think a grand total of $2 from our recording last week. So didn't even bother with the percentage on that one. Palladium, on the other hand, about a $40 dive, down about 4%. Pretty good decline in palladium and making that platinum-palladium ratio just a little bit sweeter. The equities markets, while the S&P had an okay week, with a nice little jump up, it actually finished our recording week down about 40 points from last Wednesday, but it was as high as 56.66. The Dow, on the other hand, is kind of screaming. The Dow Industrial is up over 1,900 points, almost 5% since our recording last week. And even bigger, the big winner this week is the Dow Jones Transportation Average, up as much as 8% at one point. Now, I do think it's important to note that while the S&P is at new highs, the Dow Jones Industrials are at new highs, gold is at new highs, the transports are still quite a bit below the previous highs from years ago. So the shipping of goods still has some catch up to do. So there's our snapshot this week.
It is going in the right direction.
You are correct. It is going the right direction. And it is good from just an economic health standpoint to see the transportations showing a little bit of catch up to the industrials.
Well, we've kind of beat up the Russell 2000 in the last couple months too, almost like a non-conforming type of index. Now it's up similarly to the transports here in the last week. That index almost looks like a hockey stick, really. And it's interesting to see that happen with the Dow Jones. And the S&P 500 and the NASDAQ both did hit record highs here in the last week since our last recording.
Yeah, but the NASDAQ plummeted today. It was down right at 600 points.
Yes, which is a huge percentage, right? So
Yeah.
There's a mass exodus out of the Magnificent Seven, if you will, and maybe into other equities, maybe
You
into
would think.
the dollar. Yeah. The dollar's been relatively strong too.
Relatively strong. Yields are slightly higher on the treasuries today. So I see money exiting treasuries going into other indexes. But what we haven't seen is the West figure out that they need to get on the gold bandwagon. The central banks now, for the third year in a row, are buying record levels of gold, 1,000 tons again this year. The Asian market is buying a lot of gold. Chinese citizens are paying premiums for physical gold. And at some point, when the Americans wake up and start adding gold to their portfolios, and I don't mean a gold proxy, I mean the actual yellow metal itself, I don't know what's going to be available. I just don't see the kind of gold. Usually the West drives the gold market. I mean, prices are set in New York and London, but I do think Shanghai is taking over, and we need to wake up. We really do, because there won't be the gold available to Americans as they are accustomed to. When they are ready to buy something, it'll be there for them. I don't know. I have seen ridiculous premiums people pay for physical gold, in the past. We're going to see that again.
Yeah, and even though gold's down from that high that Miles talked about, I mean, we're down just a little bit. We're still above the previous high.
Yeah.
What, about $9 above that? And gold's still up about 19% year to date.
And you don't hear anybody talking about it.
No, I mean, that's just the start of the year. And remember, gold is the canary in the coal mine.
Yeah.
Partly reacting, but partly telling you, look, things are broken here. Some of the speculation is that gold is pricing in this almost guaranteed, they like to say, September rate cut. You know, nothing's going to happen until then. It'll be convenient and maybe economically stimulating. But what actually happens when that rate cut happens? You know, this may be pricing that in. We may be seeing the dollar price that in. We may be seeing the equities price it in. We may be seeing gold price that in.
I don't know. I mean, typically the summer quarter is the weak quarter for gold. And maybe, with the strong summer quarter, we'll be heading into a sell-off in the fall. We have seen that before.
That's what I mean. It's if we're pricing in it on this run to all-time highs.
But I think that's a dangerous thing to anticipate. I don't believe we're going to see that. Not with what's going on around the world.
Well, 2 weeks ago, we jested. We joked about you saying we were getting ready to go on a run in gold, and you've been absolutely right. And I said, okay, everybody, you heard it here. Gold's going down.
Gold's going down.
But you were right, and I believe you now. And a lot of that depends, too, on if there's any quantitative easing necessary, like what other form of stimulus is going to be necessary come the fall, or what geopolitical event. It's really starting to pick up in terms of the boil with Israel to the north now, pacifying or quieting to the south with Gaza, but to the north it's ramping up with Hezbollah and Lebanon and then Iran, off on the side. So that's an issue. Certainly nothing's calming in terms of the Russian-Ukraine tensions and, well, really NATO and Russia tensions. And so just one of those events, we've talked about what is going to be the next event. So not everything is predictable, but I agree with you. The China factor is unlikely to go anywhere.
Not going to change.
No.
And in fact, Germany's talking about, you're hearing rumors about Germany mobilizing troops. That's really frightening.
Yeah, no, it is. Miles, as a chart guru, if you will, or maybe we'll call you the
chart monkey.
Chart monkey. There you go. I was going to say
let's just
nerd.
stick with monkey, guys. Just chart monkey.
You've got to be excited about.
If you're going to mock me appropriately.
These uncharted waters, if you will.
Yeah, they are
of
uncharted
all-time highs, right? So let's dig a little deeper into gold and from a technical side.
Hey, I'm going to do something you love, Tori, because while you guys were rambling and I was ignoring what you were saying and have no clue what you just talked about, what I was doing, as I tend to do, is I start looking at my charts I'm about to go through and I throw everything out the window at the last minute and start over. So I'm going to do something you love, Tori. Let's talk a little short-term, medium-term. What do you think about that?
I love it.
So short term, gold, we're looking at the breakout move starting back on June 27th, down around 2,300, 2,297, up until the high we hit today. Here's an interesting fact about the high we hit today. If you take the high point on April 12th and the high point on May 20th, and you draw a nice little trend line between those two numbers, guess where that hits us? About 2487, right where we hit today. So the reality is between that move up from around 2300 to 2485, let's say, just to get a nice round number in there, there's a good chance we actually might see a little topping action short term in the gold price, which is really going to be good for gold when we look at the medium range chart here of where do we think some of the next highs are. So I think there's a chance we could see a little bit of a correction here. We're looking at a significant move up in gold in a very short period of time. I mean, we're talking about an 8% move in a couple weeks into new highs. That's consistent. So let's say we're looking at gold back around 2410, maybe 2390. Oh, your short-term 618, 2365. Sure, does that put us back below the previous highs? Great. Does that put us anywhere near the 2020 highs? Not even close. We're in new territory. So that's some of my short-term predictions here. If we did see a little topping in the gold price, just based on some profit taking from traders in the open market, and a little bit of a sell-off just to kind of shake off some of the growth that we've seen. Now, moving over to the medium term, the real question is, okay, where's the next top? Where do we see the actual next bull move?
Read my mind.
I'm going to say 2,700. I had my 2,350 number that I argued about for a while. I still think 2,350 when I started saying it down in the 1400s, even though it actually ended up being a little bit higher than that. The range for the last couple of years was 2250 to around 2450. So I think my 2350 right in the middle was a pretty good estimate. Well, now I'm going to say 2700. I think we're going to end up landing somewhere, give or take $50 there. And I think that's going to be a pretty reasonable ceiling to where we could see an actual short-term 3-6 month bear market decline from there. That wouldn't surprise me at all. Ultimately, 3,000, 5,000, 10,000 gold, why not? Like, I don't think that's unreasonable at all. But I'm just trying to look for the stair steps, because I'm still a gold buyer. Like, I buy gold every 2 weeks through our vaulted program. But sometimes I want to dump a little bit more money into the gold market while I have it. And it's on the pullbacks, I want to do it. So short term, I wouldn't be surprised for those of you that might be sitting with a little couch cushion money, watching gold go up over the last week, and you're a little tentative. Maybe touch base with your advisor here at McIlvaney's, let them know, because we may be able to find something here in the next week or two if we get $50 back on this price. And ultimately, man, we're running out of runway for the summer. Pullback months are almost over. And if we go a couple more months here where we do a little more sideways or trading here in the 2400 range after putting this high in,
look out.
Yeah, that next step up's another couple $100. And I think it happens just as quick as this one did. So I'm concerned for people who are counting daisies right now. I really am.
Well, with this gold spike, Eric in the office here, who loves to dig into charts too, brought up the fact that silver didn't confirm the run in gold. And because it didn't, in fact, is down, and now the ratio has climbed again. Does that bring anything up for you chart-wise, Miles? I mean, does that add to the fact that you feel like we may have topped in the short term here?
Well, silver actually had a really clean move down to the 50-day moving average today. So silver took a big jump above it when we were praising silver there at the end of May, when we had our nice big move from like 25 up to over 30. And now we've been parked above 30 since then. So that was a big, healthy move above the moving averages. It's still way above the 100-day, way above the 200-day. But it did hit the 50-day moving average today. It's sort of been hugging that since about mid-June. Yeah, I don't think there's any motivation here, geopolitical motivation here as to why gold bumped and silver didn't, other than just my long-term belief that gold, slowly but steady, gold's the tugboat that kind of leads the charge. Silver will detach itself and make a run eventually. And that's why I think any time in a rising bull market, you see gold move first and silver then follows probably in the next week or two if gold stays up here. I think that is a darn good argument that we are nowhere near the end of this bull market. Gold is still in charge, and silver doesn't take over till gold gets tired. So I'm still loading up on silver. I liked 100 to 1 or 110 to 1 better than 80, but I like 80 better than 70. Still looking at silver.
Well, I think, with what did transpire in the weekend, the way you started the show, I just can't even imagine what the gold price would look like had that been a successful attempt, right? So we're thankful for the fact that there's some level-headedness in the markets, albeit hitting an all-time high. But that's exactly what I was talking about earlier. You're always one news event away to gold responding aggressively.
Sure.
And the dollar and the equities markets, all of this can turn in a day.
It can. But it's like I tell people, there are different reasons why people buy gold. But the primary reason that I see, not just for legacy, not just if the wheels come off and we have to use it, the primary reason why people buy gold is that they are losing faith in whatever, the currency. They're losing faith in the financial system. They're losing faith in the political situation. And particularly, Americans are losing faith in our media and in our government agencies. So without being political, that's been one of the driving motivations for my clients, whether they're viewing it as capital or something to pass on to their grandkids. Primarily, they just don't trust what's going on. They don't trust their information. They don't trust their leadership. They don't trust their dollar. and they are buying gold. But they need to hurry. If people are imagining that things will get better, God love them. Even if conservatives take over and we start getting a rein on some of the craziness coming out of Washington, D.C., my opinion, it doesn't matter because the financial markets are still set for this enormous debt bubble that's hanging over us. And that's not going away just because somebody new takes over.
We are in a transition period, Rob, and I'm glad you go through that because I think you're dead on. I think we're in a transition period right now. We're still mostly rational in the markets.
Good point.
I'm not saying we're rational. I think we're mostly rational because there have been some events here over the last, let's say, 18 months in the markets that have been irrational. And my biggest argument has always been the charts work until they don't. There are periods of time where irrationality takes over. And I've heard Dave McElvaney say multiple times, I'm sure he stole this from you, Rob, 20 years ago, but I've always loved the quote. Correct me if I'm wrong. It's the markets can stay irrational longer than you can stay solvent.
Correct. He didn't steal that from me. I stole that from somebody a lot smarter.
Yeah. We'll just keep, wisdom. Was it Newton that said I can only see so far because I stand on the shoulders of giants?
Yeah.
That sounds about right. I'm sure someone said it before him. So we'll just keep passing the good ones down the line. So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, hit the subscribe button and ring the bell.
Hey, by the way, Musk is thinking about changing it back to Twitter. So just keep saying Twitter, Miles. You will have weathered the entire storm.
Excellent. I'm just going to do that. Let's just start there for the rest of the close, Tori. You can find more info on Twitter at ICA something.
ICA Gold.
Thank you. See, that's why I'm not changing when I say Twitter. So you can find us on Twitter at ICA Gold. We're also on Facebook at McElvaney Financial. Our website is McElvaney.com. And most importantly, if you'd like to speak with one of us about your personal portfolio, we can be reached at 800-525-9556. Thanks for listening. Have a great week.